Ever feel like your business finances are a tangled web, and you're just one wrong pull away from chaos? You're meticulously entering all your income and expenses into QuickBooks, but how do you know if it's all adding up correctly? How can you be sure that your debits and credits are playing nicely and that your financial foundation is solid? That's where the unsung hero of accounting comes in, the trial balance. It might sound intimidating, like some complex financial ritual, but trust me, it's one of the most straightforward and powerful tools in your QuickBooks arsenal. Think of it as a quick health check for your books, a snapshot that reveals whether your fundamental accounting equation, assets equal liabilities plus equity, is in balance. Without a trial balance, you're essentially flying blind. You might be making sales and paying bills, but you won't have a clear, concise overview of all your account balances at a specific point in time. This makes it incredibly difficult to spot errors, prepare accurate financial statements, and ultimately, make informed decisions about the future of your business. Imagine trying to build a house without a level. Things might look okay on the surface, but you're setting yourself up for potential structural problems down the line. A trial balance is your level for your financial house. So, are you ready to take control of your QuickBooks data and gain a clear picture of your financial standing? In this video, we're going to walk you through, step by step, how to generate and understand a trial balance in QuickBooks. Whether you're a seasoned entrepreneur or just starting your business journey, this is a skill that will save you time, reduce errors, and give you greater confidence in your financial reporting. Let's dive in. First things first, let's get QuickBooks open. Once you're logged in to your company file, the process of generating a trial balance is surprisingly simple. There are a couple of ways to get there, but here's one of the most direct methods. Navigate to the Reports menu. You'll usually find this on the left-hand sidebar of your QuickBooks interface. Click on it, and a drop-down menu will appear. In the search bar at the top of the Reports Center, type in Trial Balance. QuickBooks is pretty intuitive, so as you type, you should see Trial Balance appear as an option. Click on Trial Balance. This will open the standard Trial Balance report. Now, what you're looking at is a list of all the general ledger accounts in your QuickBooks file, along with their ending debit or credit balances as of a specific date. The left-hand column typically displays the account names, followed by two columns, one for debit balances and one for credit balances. At the very bottom of the report, you'll see a total debits figure and a total credits figure. The fundamental principle of double-entry bookkeeping is that for every debit, there must be a corresponding credit. Therefore, if your books are in balance, these two totals should be exactly the same. This is the crucial health check we were talking about earlier. But simply generating the report is only half the battle. Understanding what you're looking at is where the real power lies. Let's break down the key components. Account names. This column lists all the different categories you use to track your financial activity. You'll see familiar accounts like cash, accounts receivable, money owed to you by customers, inventory, fixed assets like equipment or vehicles, accounts payable, money you owe to suppliers, loans payable, sales revenue, and various expense accounts like rent, utilities, and salaries. Debit balances, accounts that typically have a debit balance include assets, what your business owns, expenses, costs incurred to generate revenue, and dividends paid, if applicable. An increase in these types of accounts is recorded as a debit, and a decrease is recorded as a credit. Credit balances. Accounts that typically have a credit balance include liabilities, what your business owes to others, owner's equity, the owner's stake in the business, and revenue, money earned from sales. An increase in these types of accounts is recorded as a credit, and a decrease is recorded as a debit. Total debits and total credits. As mentioned before, these two figures should always be equal. If they're not, it indicates an error somewhere in your bookkeeping. This is your red flag to investigate further. Now, let's talk about what to do if your trial balance doesn't balance. Don't panic. This is a common occurrence, and the trial balance has done its job by highlighting the discrepancy. Here are some common reasons why your debits and credits might not match. Data entry errors. This is often the culprit. A simple typo when entering a transaction can throw things off. For example, you might have accidentally entered $100 as $1,000, or you might have debited an account when you should have credited it, or vice versa. Omitted transactions. Did you forget to record a sale, an expense, or a payment? Missing transactions will definitely cause an imbalance. Incorrect account assignments. Perhaps you categorized an expense under the wrong account. For instance, you might have mistakenly recorded an office supply purchase as advertising expense. While this won't necessarily cause an imbalance, it will skew your financial reporting. However, if you also got the debit/credit wrong, it will cause an imbalance. Posting errors. In some cases, QuickBooks might encounter an error when posting a transaction to the general ledger. This is less common but can happen. So, how do you go about finding these errors? Here are a few troubleshooting tips. Check the most recent entries. If the imbalance is recent, start by reviewing the transactions you've entered or modified most recently. There's a higher probability the error lies there. Review journal entries. If you've made any manual journal entries, double-check that the debits and credits in each entry are equal. Run detailed reports. Use other QuickBooks reports, such as transaction detail reports for specific accounts, to scrutinize individual transactions. Look for unusual or incorrect amounts. Compare to previous periods. If you had a balanced trial balance in the previous period, compare the current trial balance to the previous one and focus on the accounts where the balances have changed significantly. Utilize the audit log. QuickBooks has an audit log that tracks changes made to your data. This can be invaluable in identifying who made what changes and when, helping you pinpoint potential errors. Get a fresh perspective. Sometimes, staring at the same numbers for too long can make it difficult to spot mistakes. If you have a colleague or accountant, consider asking them to take a look. With that said, thanks for watching, and until next time.